Trading View traders, Akil here. It is Friday, April 27th, about close to 11 o'clock in the morning. That's New York time. And just wanted to give you guys a quick video following up on a pair that I shared with you here on Trading View the other week. This morning is Friday, so we're not active in the markets. We have an accountability session, but because we had a few members not show up, what we decided to do is a little bit something different. We did a live pre-weekend checklist, and organization is the key to trading success, in my opinion. You have to treat it like a business, and like any business, you should have an organized schedule, a consistent routine that you have. And one of the routines that I do either at the end of the week or during the weekend is I do a nice broad analysis of the markets and set up my watch list for the week ahead. And when I say my watch list, I'm not necessarily talking about the specifics of what I'm actually going to trade, but more of the broad picture. We gave the example this morning. Think of it like an artist making a painting, right? I'm not doing all the fine details yet. That's going to come later. What I want to do first is just do the exterior, right? Draw the perimeter, draw the most basic guideline of what my what I want my piece of artwork to look like. And then later on, I'm going to fill in the details and kind of make it the end product. So something that I do is I look through all my pairs, and I just form a confirmation bias. What am I looking for? What direction am I looking for? What locations am I looking for market price action to retrace at? And then I can go in next week or as the week begins and really dial down on the opportunities. And something that we looked at in last week's video here was the dollar Canada. We're looking at a retest of the head and shoulders pattern. And this is the head and shoulders is right up here with your left shoulder, your head, and your right shoulder. And for you guys that are newer, the head and shoulders is a classic reversal pattern, essentially when a trend loses its steam and we start to see a reversal in price. And what we're doing right now is we're coming back into that right shoulder, which is giving me the signal of a potential short opportunity. And as traders, when we say signal, the problem with a lot of new traders is they think one signal is enough, meaning we do analysis like this should, right, if the market moved the way it's supposed to, should offer a shorting opportunity. But one thing that you'll find out if you've been in the market for any time right now is the market does what it wants when it wants to. It doesn't always follow the conventional path. So as traders, I like to look at us as more of detectives, where we're going into the market and we're looking for clues. One clue on a specific chart is okay for us to form an opinion, but maybe not enough for us to make a case for entry, right, to build our case. So like any detective, the more clues that line up, right, the more pieces of the puzzle that we can put together, the better the opportunity is, right, the more likely we are of being correct. Now we'll still be wrong, right? It doesn't mean that we are correct. And I keep putting emphasis on this because so many new traders think that if the trade doesn't go in your direction, that you are wrong in your analysis. You can be 100% in your analysis. You can have the picture perfect setup where everything aligns and the market still does something different. And that's okay, right? Process over outcome. For you guys that listen to today's podcast episode called The Numbers Game, right? Did a great example of that, talking about the Houston Rockets, an NBA team, and comparing the analytics of basketball to the analytics of trading. But what we have here is we have a head and shoulders pattern, a retest of that level, of that neckline and that shoulder level, which is a signal for a potential short. And then we also have an exhaustion pattern here. This is what I call a rising channel, where the market is making a high momentum move, right? An obvious, basically a straight move from 125.30s up to about 128.60s. And then the market starts to slow down a little bit, right? We're still moving bullish, but the path is a lot more choppy, right? So you see how steep this slope is right here. We're still moving up, but we're kind of trending more, looking as if we're running out of steam, which is another, this rising channel is another signal for a potential short, right? So you're adding that up, the head and shoulders potential short, the rising channel potential short. If you're a user of the RSI, for example, let's see if the RSI on the 4-hour perhaps gives us anything. We have a little bit of divergence on the RSI, right? So price action going up, RSI, giving us an opposite move. That's called divergence. You can add that to your score as well. And for you guys that are familiar with a scoring-based system such as the CTS system, what you're doing is you're taking each of these technical indicators, not actual indicators, but the technical tools that you're using to analyze the market, and you're giving yourself a score based off each one of those. And obviously, the higher the score you get, the better the opportunity is. So one of the things on my radar for this week was the dollar Canada. Again, I just want to share this with you because we looked at this last week. I hope you guys have a great weekend. I hope you guys have a great start to next week's trading. The pound was our best friend this week. Some very good moves on the pound. And we'll see if we can continue that into next week's trading as well. So until then, plan your trade, trade your plan. Hope you guys enjoyed this video. If you do, just give me a comment saying, hey, Akil, I liked it. Feel free to share it as well. And I'll see you guys next time.